Hello everyone, Namaste and welcome. This is your CSR, CS Rajesh, your log area. I hope you guys are doing good and keeping your preparations intact. So welcome to the rapid revision of the Indian Partnership Act 1932. Before we start, as promised, I have completed compiling a new question bank for CA Foundation law paper, in which I have added few questions from LLB examinations and judiciary examination for the purpose of conceptual clarity. And for the practical questions, I have modified the answers by dividing them into four parts, that is provisions, facts, correlation and conclusion, which will help you guys in presenting the answers in the examinations. Let's start with the rapid revision of the Indian Partnership Act 1932. Unit 1 of the Indian Partnership Act 1932 covers section number 1 to 8, which deals with nature of partnership. In that, section number 1 provides the short title, extent, commencement. The short title is the Indian Partnership Act 1932. Extent, it is applicable to all of India and there are no exceptions. Commencement, this act came into force on 1st October 1932 except section number 69, which deals with consequences of non-registration of partnership firm, and this came into force on 1st October 1933, exactly 1 year after the commencement of the act. So all section numbers came into force on 1st October 1932 except section number 69, which came into force on 1st October 1933. Section number 2 provides the definitions of various words used in the act. Section number 3 provides the application of provisions of contract act to the partnership. Because the partnership is the result of an agreement, the provisions of Indian Contract Act is also applicable to the partnership. But if there is an inconsistency between the Contract Act and the Partnership Act, the Partnership Act is applicable. Section number 4, important section number, which provides the definition of partnership, partners, firm and the firm name. Section number is 4 and there are 4 words which section number 4 defines. First one, partnership, second one, partners, third one, the firm, and the last one is the firm name. So what is partnership? Partnership is a relationship between whom the persons who are agreed to share the profits of the business carried on by all or any one of them acting for all. So it is a relationship between whom persons can be natural persons or artificial persons, agreed to share what profits of the business. Agreed means there must be an agreement. Partnership is the result of an agreement, and there should be an agreement to share the profits of the business, means they should be carrying the business, and the word business includes trade, profession as well as the occupations, and they should be agreeing to share what profits of the business. But however, sharing of profit is not the conclusive test, it's only a prima facie test. It means there can be cases where a person is sharing a profit but not a partner, and there can be cases where a person is not sharing a profit but maybe a partner. So sharing a profit is not a conclusive test. Then what is the conclusive test? Carried on by all or any one of them acting for all, which is also called as mutual agency, where for the act of one partner who is responsible, all the partners are held responsible. So a partner act as an agent for the other partner. So every partner act as an agent for the other partners for the purpose of carrying on the business of the firm. So partnership means it's a relationship between the persons who are agreed to share profits of the business carried on by all or any one of them acting for all. Next we have partners, the persons who entered into a partnership with one another in a partnership firm, individually called as what? Partners. And all of them collectively or together is called as partnership firm. And the name under which they carry the business is called as the firm name. I repeat, the person who entered into partnership with one another are called as partners, all of them together called as the firm, and the name under which they carry the business is called as the firm name. So because partnership firm does not have separate legal entity, so whenever we refer it as a firm, it means all the partners together. Next, section number 5. Section number 5 provides the provision with respect to the creation of partnership. The relationship of partnership arises only out of a contract or only out of an agreement. Without an agreement, there cannot be a partnership, but that agreement can be either expressed or implied. Unlike HUF, where the relationship is created by status, that is by birth. So section number 5 provides that partnership is the result of an agreement, not by status. Then we have essential element of partnership based on the definition of partnership. Correct, right? So what is the definition of partnership? Partnership is the relationship Relationship between whom? Between the persons. So here it's an association of two or more persons. So partnership is the association of two or more persons. So who can be a partner of the partnership firm? Any person. It can be a natural person or it can be a artificial person. So minimum two persons, maximum 50. The maximum number of partners is not given in the Partnership Act. Then where it is given, sir? It is given in the Companies Act, section number 464, which deals with illegal association. So any association or a partnership having more than 50 persons and carrying the business for the profit, and if it is not registered as a company, it is called as illegal association. So minimum 2 partners, maximum 50 partners. Next one, it is a result of an agreement. Partnership is the result of an agreement. No agreement, no partnership. But agreement can be either expressed or it can be implied. What is expressed, sir? Expressed means by words. What is implied, sir? By conduct or by the circumstances. One of the best example for implied is partner by estoppel or partner by holding out. Next one, a partnership firm is formed to carry what? Business. Only for the purpose of carrying a business. And the word business includes what? Trade, profession as well as the occupations. And the partnership motive should always be to earn what? Earn the profit, not for a charitable purpose. And also, if two or more persons having a joint ownership in a property and they're sharing the benefits of the property, are they called as partners? No, because they're not carrying any business. So carrying business is one of the essential element of partnership. Next one, agreement to share the profit. It is also one of the essential feature of the partnership, but it is not the conclusive evidence. It is only a prima facie test. And at what ratio the partner shares the profits, sir? You guys know, if it is agreed, agreed ratio, not agreed, in the equal ratios. So you cannot come to a conclusion based on the fact that if a person is sharing a profit, he is a partner. Because there are cases where a person is sharing a profit, may not be a partner, or there can be cases where a person is not sharing a profit but he may be a partner. So sharing of profit is not the conclusive test, it is only a prima facie test. Next one, mutual agency. So what is mutual agency? Carried on by all or any one of them acting for all. So every partner in the partnership firm act as an agent of the firm for carrying the business of the firm. And for the act of one partner, who is responsible? All the partners are responsible. So these are the essentials of partnership, which they may ask in the theory question. First one, association of two or more persons. Second one, it is a result of an agreement. Third one, to carry on the business of the firm, which includes trade, profession, occupation. Third one, agreement to share the profits. And the last one, mutual agency, carried on by all or any one of them acting for all. If they ask theory question about the essential element of partnership, write the definition of partnership, section number 4. Write the essential element and also do write the case law name, that is KD Kamath and Co. In this case, the Supreme Court held that two essential to be satisfied for the existence of partnership is agreement to share the profits and mutual agency. So you should write this case name as well when you are writing the answers for the theory question. Section number 4. Then next, section number 6. Important section, most important section, based on which they can ask either theory question or they can ask the practical question. Section number 6 provides the provision with respect to determination of existence of partnership. How the existence of partnership is determined in the partnership firm. See, simple. While determining whether a group of person is or not a firm, or is or not a partner in the firm. So when you are deciding whether a group of persons is or not a firm, whether a person is or not a partner in the firm, you should give a regard. The regard shall be at the real relationship, not the sharing of profit, the real relationship between the parties by taking into consideration all the relevant facts. I repeat, observe the keywords while deciding whether the group of person is a firm or not, whether a person is a partner or not in a firm. The regard shall be had to the real relationship between them. And to consider that real relationship, what you will do? You will take into account all the relevant facts. And there are few cases where they will not be considered as the partners even if they are sharing some profit. Example, sharing of profits are the benefits arising out of a property in which the persons are having a joint or common interest does not itself make them as a partners in the partnership firm. Why? Because they're not carrying any business. Instead, they are called as the joint owners. I repeat, sharing of profits are the gross returns arising from the property by the persons holding a joint or a common interest in that property does not itself make such persons as the partners. Second one, the receipt of any share of profits of the business or any payment which is contingent upon the earning of profit of the partnership firm does not itself make such persons as the partner in the partnership firm. In particular, such receipt of share in the profit or a payment by the following four persons is not considered as what? They are not considered as the partners. Not considered as the partners. Who are they? The first one is in case of, once again, in case of receipt of such share of profit or a payment by a lender of money to the persons who is engaged or about to engage in the business. If a creditor gives a loan to the partnership firm, and for that loan, if he is getting a share in the profit, is he called as a partner? No. Second one, by a servant or an agent as a remuneration, is he called as a partner of the partnership firm? No. Next one, if a widow or a child of a deceased is receiving a share in the profit as an annuity, are they called as partner of the partnership firm? No. Next one, by the previous owner or a part owner of the business as a consideration for a sale of goodwill, are they called as partner of the partnership firm? No. So in all these cases, they are not called as the partner of the partnership firm. Section number 6. They may ask theory question or practical questions based on this, and for the practical questions, please do refer to the question bank. I repeat for the last time. Section number 6. How to decide whether a group of person is a firm or not. So while determining whether a group of person is a firm or not, whether a person is a partner in the firm or not, the regard shall be had to the real relationship between the person, having consideration to all the relevant facts. Sharing of profits are the benefits arising out of a property in which the persons having a joint or common interest does not itself make them as a partner of the partnership. Instead, they are called as what? Joint owners. In the same way, sharing of profit or receipt or any payment contingent upon the earning of profit by the partnership does not make them as what? Partner of the partnership firm. In particular, such receipt or a payment by a lender of money to the person engaged or about to engage in the business, or by a agent or employee as a remunerations. Third one, by a widow or a child of a deceased partner as an annuity, or by the seller of a goodwill as a consideration for the sale of goodwill. These persons, even though they are sharing the profit, they are not considered as partners of the partnership. Then next, section number 7. Section number 7 provides what? Definition of partnership at will. And what is partnership at will? Section number 7, remember the hint, remember the section number 7. 7 is the jersey number of whom? Talat, Dhoni, and also the jersey number of whom? Ronaldo. They can take the retirement as per their own will. Dhoni took the retirement as per his own wish or own will. So section number 7 deals with what? Partnership at will. So section number 7 clearly provides that where there is no provision is made by a contract between the partners with respect to the duration of their partnership or determination of partnership, it is called as partnership at will. Simple conditions. If there is no provision in the partnership deed with respect to the duration or with respect to the termination, that is the end of the partnership, it is called as partnership at will. And in case of partnership at will, it can be dissolved by any partner by giving notice in writing. That is the unique feature of partnership at will. I repeat, the partnership at will can be dissolved at any time by giving a notice by any partners. Then we have particular partnership. Partnership at will, there is no provision. Particular partnership, there will be a provision where a provision is made by a contract between the partners for duration or determination of their partnership. It is called as particular partnership. And a particular partnership is generally formed for a particular adventure or a particular period, and this cannot be dissolved by notice. It can be dissolved only with the consent of all the partners. And one more provision is that if a partnership firm is formed for a particular period and if it continues to carry on the business after that particular period, it becomes what? Partnership at will. Section number 8. Then we have difference between various types of organization, for which you guys can refer to the material. In the recent MTP, they asked the difference between partnership and co-ownership. Correct, right? We should write the first difference is obviously definitions. Second one, mutual agency. Partnership, there is a mutual agency. In case of co-ownership, there is no mutual agency. The transfer of interest, in case of partnership, the partner cannot transfer his interest without the consent of other partners, whereas in case of co-ownership, a co-owner can transfer his interest without the consent of other co-owner. And one more is mode of creation. Partnership is always the result of an agreement, whereas the co-ownership is the result of agreement or by status. Then we have difference between partnership and company, which is easy and you guys can write in the examinations. Then partnership and HUF, and partnership and club, and the partnership and associations. Next one, types of contract. Sorry, types of partners. So there are various types of partners. Based on this, I don't expect ICAI to ask questions. So, but we will have a brief idea about what the types of partners as well. So, who is the first partner? Active partner, actual partner, or ostensible partner. Keep this in mind. You should mention certain keywords while writing the answers in the examinations. Only when you write those keywords, it gives certain meaning and you'll get a good marks in the examination. Who is active partner? You should write three provisions here. He is a person who becomes a partner by agreement and he actively take part in the conduct of the business, and because he is known to the public, he must give a public notice of retirement. Three simple sentences which you are supposed to mention if they ask question about who is active partner. I repeat, he is a person who becomes a partner by agreement, actively participate in what? Conduct of the business. He is supposed to give a public notice of retirement. Next one, sleeping partner or a dormant partner. He is a partner by what? Agreement. Sleeping partner is a partner who becomes a partner by an agreement. He does not take part in the conduct of the business and he is not required to give the public notice. Why? Because he is not known to the public. So we can say that the principle of partner by estoppel or partner by holding out is not applicable to which partner? Sleeping partner or dormant partner. Next one, nominal partner, namesake partner. Nominal partner is a partner who lends only his name without having a real interest in the partnership firm. He is not entitled for the share of profits. He does not make any investment. He does not take part in the management of the business. But however, because he is famous and because he is known to the public, if he wants to retire from the partnership firm and if he wants to be exonerated from his liabilities, he is supposed to give a public notice. And is he liable to third parties? Yes, he is liable to third parties. And based on the small points, they can ask question in the examination. Is that the partner by nominal partner is responsible to third parties? The answer is yes. Next one, partner in profit only. He is a partner who only receives the share of profit in the partnership firm, not the losses. That person is called as what? Partner in profit only. Incoming partner, outgoing partner, nothing but admission and retirement. Who is incoming partner? When a partner is admitted to the partnership firm with the consent of all the partner, he is called as incoming partner. Outgoing partner, when a partner leaves the firm, he is called as what? Outgoing partners. Then most important out of all these definition is all these types of partner is partner by holding out. One of my favorite, partner by holding out. See, there are keywords which you guys should remember in order to write the perfect answers for partner by holding out or partner by estoppel. Simple. A person is called as partner by holding out or a partner by estoppel only when it satisfies these three conditions or four conditions. What is the first one? He is the person. It can be anyone who by words or a conduct. So these words can be spoken or written. I repeat, anyone by words, spoken or written, or by conduct. What he does, he represents himself or knowingly permits himself to be represented to be a partner in the firm. When he represents himself, partner by estoppel. When he knowingly permits the partnership firm to represent him as a partner, it is called as partner by holding out. So in that scenario, because he is representing himself as a partner or he is allowing the firm to represent him as a partner in the firm, he would be liable as a what? Partner in the firm. For what? To anyone who on the faith of such representation has given credit to the firm. Only for the transactions where some innocent party has given credit to the firm. Only for that transaction he will be considered as partner by estoppel or partner by holding out. not for all the other activities. So I repeat, section number 28 provides the provision with respect to partner by holding out. Who is partner by holding out? Anyone who by words or conduct, spoken or written, represent himself or knowingly permits himself to be represented to be a partner in the firm, then he is liable as a partner in that firm to anyone who on the faith of such representation has given what? Given the credit to the. So with this, we are done with the unit 1, section number 1 to 8. Let's quickly recap whatever we discussed in section number 1 to 8. We discussed section number 1, short title, extent and commencement. Section number 2, definition. 3, application of contract act to partnership. 4, definition of partnership, partners, firm and the firm name. Section number 5. Section number 5 provides that partnership is the result of an agreement, not the status. Section number 6, most important section number, determination of existence of partnership. Section number 7, partnership at will. Section number 8, particular partnership. Then we also discussed few difference between the various types of organizations. Then we discussed types of partners. In that we discussed active partner, sleeping partner, nominal partner, partners in profit only, incoming partner, outgoing partner, and the most important one, partner by holding out or partner by stop. Then we have unit 2. This is where they ask most of the practical questions. Unit 2, relation of partner to one another. Section number 9 to 17. Unit 2 of the Partnership Act. Unit 2 of the Partnership Act covers section number 9 to 17. In that, section number 9, 3 3s are 9. Section number 9 provides the 3 general duties of the partners, and these duties are common in every partnership, and these duties are imposed by the Act itself. So you have to remember the 3 keywords to remember the 3 provisions to write section number 9. First one is what? Greatest common advantage. Second one is what? Just and faithful. And the third one is what? True and full informations. So every partner shall carry the business of the firm to the greatest common advantage, means for the benefit of all the partner. He should not make any personal profit. Second one, he should be just and faithful to each other. All the partners in a firm should be just and faithful to whom? Each other. And the last condition is that the partner shall provide a true accounts and a full information of all the things affecting the firm. To whom? To the partner, or to his legal heads, or to the legal representatives. So these are the 3 common duties which are imposed by section number 9. General duties of partners. Greatest common advantage, just and faithful, true accounts and full information. Section number 10 provides duty to indemnify for loss caused by fraud. This is section number 10, which provides a specific duty or casts specific duty upon the partner. If a partner commits a fraud while carrying the business of the firm, and if the firm suffers the loss as a result of such act of the partner, then it is the duty of the partner to indemnify whom? Indemnify the firm. So I repeat, a partner shall indemnify, means compensate the firm for any loss caused by his fraud in the conduct of business of the firm, only in the conduct of business of the firm. Next, section number 11. Section number 11 provides what? Determination of rights and duties of the partners by contract between the partners. Remember the section number. Determination of what? Right side, rights and duties. The rights and duties of the partners in a partnership firm is determined by contract between the partners, and such contract may be expressed or implied by the course of dealing between the partners. So I repeat, section number 11 provides that subject to the provisions of Indian Partnership Act. We have solved so many questions to understand what is this word subject to, and we have so many questions in the question banks to understand the examples, to understand the concept of section number 11. So please refer to the question bank. Okay, so subject to the provisions of Indian Partnership Act 1932, the rights and duties of the partners are determined by what? Contract between the partners, and such contract can be expressed or it can be implied with the course of dealing. For the implied agreement, we have an example in the question bank. Next one, It can be varied. The partnership deed may be varied with the consent of whom? All the partners. And the next point is that the partnership deed is an exception to section number 27 of the Indian Contract Act 1872. Section number 27 of the Indian Contract Act 1872 provides that any agreement in restraint of business or trade is void. But however, one of the exception is what? Partnership deed. So if the partnership deed restricted partner from carrying a competing business when he is a partner, is that agreement valid or not valid? The answer is yes, it is valid because the partnership deed is an exception to section number 27 of the Indian Contract Act 1872. Next one, section number 12. Section number 12. Section number 12 deals with what? Conduct of business. Business. Section number 12 deals with conduct of business. The subject to contract between the partners. See, it starts with the word called as subject to contract. Means section number 12 says, whatever I am saying is not superior. I am subject to the agreement. If agreement say contradictory provision, you please follow what? Agreement. So subject to the contract between the partners, every partner has a right to take part in conduct of business. See, keep this in mind. Section number 12 provides 5 provisions. In that first one, every partner has a right to take part in what? Conduct of business. Second one, he has a right to take part in the conduct of business, and there is also duty upon it, which provides that he is bound to attend diligently his duties while carrying the business of the. Third one is the most important one, which provides that any differences between the partners as to ordinary matters. I repeat, any differences as to the ordinary matters connected with the business of the firm may be decided by the partners, decided by what? Majority of the partners. But however, before decision is taken, every partner shall be given what? Opportunity to express their opinion. But however, in case of any differences with respect to the change of nature of business can be resolved only with the consent of all the partners. There are 2 points here. First one, any differences with respect to ordinary matters can be resolved with the consent of majority of partners. However, every partner shall be given a reasonable opportunity to express their opinion. But any matters with respect to change of nature of business, for example, admissions or change of name of the firm or change of business of the firm, these are called as change of nature of business, and for such activities it requires consent of whom? All the partners. And the last 2 points deals with access to the books of accounts of the firm, which provides that every partner has a right to access to inspect, copy, AIC, All India Congress. Every partner has a right to access to inspect and copy any books of the firm. In what faith? Good faith. It should be in good faith. If the partner is dead, if he is not dead, then this right is shifted to whom? Shift to the legal representative or legal heirs, which provides that in case of death of the partner, his legal heirs or legal representatives has a right to access to inspect and copy of any books of the firm. In what faith? Good faith. If it is in bad faith, it is not allowed. So section number 12 provides 5 provision. First one, take part in the conduct of the business. It should be diligent. Differences between the partners, how they are resolved. And the fourth one and fifth one, with respect to access to the books of the firm. 13, one of the important provision which will help you guys in even in your accountancy as well, accounting paper as well. Mutual rights and liabilities of the partners. There are 6 points under section number 13, and it is subject to what? Contract between the partners. Subject to the contract between the partner. First one, no partner is entitled to receive what? Remuneration for taking part in the business. Second one, every partner is entitled to share equally the profit earned and also to contribute equally to the losses sustained. Third one, if a partner is entitled for interest, it means the interest on capital is payable only when there is a provision in the agreement. So if a partner is entitled for interest, such interest is payable only out of profit. If there is a losses, it cannot be paid. Next one, partner making for the purpose of business any payment or advance beyond the amount of capital agreed to be subscribed, entitled for what? Interest at the rate of 6% per annum. See, observe the wordings carefully here. Why reading the actual provisions which are given in the material is important? Because if you just write interest on loan, that has a different meaning. And if you read this provision carefully, it provides that if a partner for the purpose of business, if he makes any payment on behalf of the firm, even if he has done any payment on behalf of the firm, till he receives the reimbursement of that payment, he has a right to get an interest. How much? 6% per annum. Not only the loan and also for the payment. So partner making for the purpose of business any payment or advance beyond the amount of capital agreed to be subscribed by him, he is entitled to get an interest of 6% per annum. Fifth one and sixth one deals with indemnification. Fifth point provides that, excuse me, the fifth point provides that the firm is liable to the indemnify whom? The partners, means to compensate the partner in respect of any payment made or liabilities incurred in the ordinary and proper conduct of the business in doing such act in a what? Emergency, for the purpose of protecting the firm from the loss, as would be done by a person of ordinary prudence in his own case under similar circumstances. See, if you remember this provision, this will help you guys even in case of agency contract as well, where it clearly provides that agency by necessity, same provisions. So partner can do all such activity, means if a partner does any payment or incurs any liabilities in the ordinary and proper conduct of business or in doing such act during emergency for the purpose of protecting the firm from the loss, as a man of ordinary prudence would do in his own case under the similar circumstances, the firm has to indemnify for the payment made or liabilities incurred. In the same way, the partner should indemnify the firm for any loss caused to the firm by his willful neglect or wrong or conduct of business of the firm. If he does any willful neglect, firm suffers the loss, he should compensate whom? He should compensate the partnership firm. Now you can say, sir, section number 13 subsection 6 and section number 10 both are similarness or no? Section number 10 provides the obligation on the partner to indemnify for the loss caused by his fraud, and section number 13 provides the provision with respect to indemnification by a partner for any loss caused to the firm by his willful neglect or wrongs. That is for fraud and this is for willful neglect. Section number 13, how many points are there? 6 points. Section number 14, property of the firm. One more important provision, based on this they can ask a practical question. Practical question. So what is section number 14, sir? Section number 14 provides property of the firm subject to contract between the partners. Again, this provision is not superior, it is subject to what? Contract between the partners. The partners can exclude any of these things from the partnership property. Subject to contract between the partners, the partnership property of the firm includes what? All property, rights, interest in the property which are originally brought into the stock of the firm. So PRI, Puneet Rajkumar Industries, property, rights and interest which are brought into the stock of the firm. And it also includes all the property, rights and interest which are acquired by the firm for the purpose and in the ordinary course of business of the firm. So whatever they brings in at the time of commencement of partnership firm, partnership property, it also includes all the property, rights and interest in the property which are acquired by the firm for the purpose and for the purpose of what? Carrying the business of the firm. It also includes what? Goodwill. But however, partners by an agreement may agree that any one of these may not be part of their partnership property. For example, they can agree that for an outgoing partner, the partnership property does not include goodwill. In that scenario, goodwill is not considered as the property of the firm. 15, easy provisions. Section number 15 clearly provides that the property of the partnership firm should be held and used exclusively for the purpose of what? Business of the firm, but subject to contract between the partners. If the contract say contradictory provision, is supposed to follow the contract. If agreement is silent, the property of the partnership firm should be held and used exclusively for the purpose of what? Business of the firm. Section number 16, based on which they can ask theory question in the examination, personal profit earned by the partner. See, section number 9 provides duties, and one of the duty is that a partner should always work for what? Greatest common advantage, means for the benefit of all partner, not for his personal benefit. Now what if he does? What if he makes a personal benefit out of the partnership firm? What would be the consequences? Section number 16 provides the consequences of breach of duty of section number 9, which provides that subject to contract between the partners, if a partner derives any profit for himself out of transaction of the firm, or by use of property of the firm, or by business connection of the firm, or by firm name, he shall account for it and he should pay it to the firm. I repeat, subject to the contract between the partners, if a partner derives any profit for himself from any transaction of the firm, or from the use of property of the firm, or by business connection of the firm, or by use of firm name, he shall account for it and should pay it back to whom? Pay it back to the firm. Section number 16. Section number 17, the mutual rights and duties of the partners after change in the firm. Simple says simple provision, it remains the same. Subject to contract between the partners means if agreement is silent, the mutual rights and duties of the partners remains the same in all these three scenarios. You just have to remember what are those three scenarios. First one, change in the constitution of the firm. Second one, where the partnership firm is formed for a particular purpose, but it continues to carry on the business for the after the particular purpose as well. Means particular partnership firm becomes partnership at will. And the third one, where the firm is formed for a particular purpose or adventure, and if the firm adds one more adventure or undertaking, for the new undertaking or adventures, the rights and duties what remains the same. The first one, the mutual rights and duties of the partners in the reconstituted firm remains the same as they were immediately before the change, unless the partners agrees otherwise. Next one, where the firm is formed for a fixed term and continues to carry on the business even after the expiry of that particular term, the mutual rights and duties of the partners remains what? Same as they were before the expiry. And the last one, if the firm is formed to carry out one or more adventure or undertaking, and if it carries out any other adventure or undertakings, the mutual rights and duties of the partners remains the same as those in respect of the original undertaking. Section number 17. Section number 17. And how do we decide the section number 17? The mutual rights and duties of the partners after what? Change. After what? Change. Section number 17. And with these we are done with the unit 2. Unit 2. Let's quickly recap whatever we discussed till now. Section number 1, short title, extent, commencement. Section number 2, definition. Section number 3, application of contract act to partnership. Section number 4, definition of partnership, firm name and the partner. Section number 5, partnership is the result of agreement not by status. Section number 6, determination of existence of partnership. Section number 7, partnership at will. Section number 8, particular partnership. Section number 9, the general duties of the partner. Section number 10, duty of the partner to indemnify the firm for any loss caused by the fraud of the partner. Then 11, determination of rights and duties. 12, conduct of business. 13, the mutual rights and duties of the partners. 14, property of the firm. 15, application. 16, personal profit earned by the partners. 17, the rights and duties of the partners after change in the firm. So let's start with the unit 3 now. Unit 3 deals with what? Relation of the partners to third parties. This is the favorite part of the ICI from which they generally ask questions in the examination. Unit 3 and Unit 4 is are the units in which we can expect questions in the examinations. Theory questions as well as the practical question. Section number 18 is simple. 18, N2. 8 in Kannada is called as N2. N2 means N2, age N2. 18, age N2. Section number 18 provides that subject to the provisions of this act, a partner is the agent of the firm for the purpose of what? Business of the firm. It means if a partner carries on the business of the firm and if he does something for such activity, who is responsible? The firm is responsible. Then section number 19. Section number 19 deals with what? Implied authority of a partner as an agent of the firm. Section number 19 provides the implied authority of a partner. See, simple provision. For the act of one partner, the firm is responsible only if the act of that partner is within his either expressed right or implied right. Expressed right means the right which is given by agreement between the partners. Implied right means the right which is conferred by section number 19. Only when he does something which is within his expressed or implied right, then the firm is responsible. Otherwise, the firm is not responsible. Means that it is not binding upon the firm. Section number 19 provides, subject to section number 22. Section number 22 provides that an act of a partner binds the firm only if it is in the firm name. So, whatever a partner does, it should be in the firm name. That is the first condition. Second condition is that the act of the partner which is done to carry on in the usual way. So, whatever the act done by a partner should be done in the usual way of doing the activities which is adopted by the firm. Third one is to carry on business of the kind carried on by the firm. That will bind the firm. I repeat, subject to section number 22, which provides that the act of a partner binds the firm only if it is in the firm name. The partner, if a partner does any act which is done to carry on in the usual way, business of the kind carried on by the firm, binds whom? Binds the firm, means the firm is responsible. But however, there are few act or few transactions which section number 19 itself provides that they are out of the scope of section number 19, means they are not considered as implied authorities. And if a partner does these activities without having an express authority, the firm is not responsible. So what are these? There are 8 points. How many points? 8 points. 8 points. There are 8 points with respect to authority of a partner, which are not considered as implied authority. What is the first one? A right to submit dispute of the firm to where? To the arbitration. Give me a second. Okay. Yes. Now, there are few activities which are not covered by section number 19. What are they? First one, a right to submit dispute to arbitration. What is arbitration? It is an agreement to refer the dispute to a private individual, an independent party who will decide the case. So, a partner does not have a right to submit a dispute of the partnership firm to an arbitration, not an implied right. Second one, to open the account of the firm in his own name, he can't do. Third one, to enter into a compromise or relinquish. Compromise means to compromise with the rights of the firm, and to relinquish means to give up. So a partner does not have an implied authority to compromise or relinquish any claim or a portion of the claim of the firm with a third party. If he is expressly authorized, he can do it. If he is not authorized, he does not have a right to compromise or relinquish any claim or portion of claim by the firm. Next one, withdraw a suit filed on behalf of the firm. The partner does not have an implied authority to withdraw a suit which is filed by the firm. Fifth one, admit any liability in a suit against the firm. If somebody has filed a case against the firm, he cannot individually go and admit the liability. Sixth one, acquire immovable property on behalf of the firm. He does not have a right to acquire the immovable property on behalf of the firm. Next one, transfer immovable property on behalf of the firm. He cannot sell the immovable property of the firm. And the last one, enter into a partnership on behalf of the firm. So these 8 activities are outside the scope of what? Implied authority of a partner. Next one, section number 20, extension and restriction of partner's implied authority. See, the partner has an implied authority as per section number 19, which provides that subject to section number 22, any act of a partner to carry on in the usual way business of the kind binds the firm. And this implied authority of a partner may be either extended or restricted by what? By an agreement. So partner may by a contract either extend or restrict the implied authority of a partner. By what? By an agreement. But however, notwithstanding such agreement, even though there is a restrictions upon the rights of a partner by an agreement, notwithstanding agreementally condition idrunu, in spite of that, notwithstanding such restriction, if a partner does something which is within the authority of the implied authority of a partner, it binds the firm unless the person with whom he is dealing is knows of such restriction. If an innocent party, a third party, without knowing that there is a restriction in the agreement about the rights of the partner, if he enters into a contract, is the firm responsible, not responsible? Yes, responsible. Section number 20. Based on this, they can ask practical question in the upcoming examination. I repeat, every partner has a implied authority as per section number 90. That is, he has a right to buy the goods, sell the goods, pledge the goods, to borrow the money. These are his implied authority. This implied authority of a partner can be restricted or it can be extended by an agreement. But even though there is an agreement to restrict a implied authority of a partner, if a partner does something which is within his implied authority with a third party who is acting in what faith? Good faith. Is the firm responsible? Not responsible. Yes, it is responsible in spite of that restriction. Section number 20. Section number 21. Acts done in emergency. Acts done in what? Emergency. Emergency. Section number 21 is like exception clause or overriding clause or overriding provision, which clearly provides that a partner can do all such activities for the purpose of saving the firm from the loss as a man of ordinary prudence would do in his own case under the similar circumstances, and all such activities binds the firm. 19 says an activity of an act of a partner binds the firm only if it is subject to 22 plus if it is in the usual way plus it is in the to carry on the kinds of business of the firm. 20 deals with extension and restriction. 21 provides authority of a partner in case of emergency, which says that a partner can do all such acts. He can do anything to save what? The firm from the loss. As a man of what? Ordinary prudence. Would do in what case? Own case. In case of what? Emergency. It will bind whom? Binds the firm. Section number 21. And if you remember the headings of these provisions, and you can aramse write provisions in the examination. That is why I stress you guys, I always make you guys remember the section numbers and the provisions in the class in a fun way, not by stressful way. Are you guys mugging up the section numbers? No. So we learn section numbers to remember the provisions of the act, not to write section numbers in the examinations. Obviously, if you write section numbers, that will give good marks in the examinations. When you guys can learn sections in a fun way or in an easy way, then what is wrong in remembering section numbers as well as the provision? It is a bonus, correct? Right? Yes, bonus which only CSR students gets. Section number 22, it should be in whose name? The firm name. 23, 24, also important. I expect ICA to ask questions out of 23 and 24. 23, effect of admission by a partner. If a partner makes any admissions or a statement while carrying the business of the firm, such statements act as what? Act as a statement by the firm and the firm is responsible. Observe the keywords here. Any admission by a partner binds the firm if that admission or representation made by the partner concerning the affairs of the firm in the ordinary course of business and if it is done within the scope of the partner. So for such admissions or representations or a statement, who is responsible? The firm is also responsible. Section number 23. 24, effect of notice to an acting partner. Any notice given to an acting partner or a partner who habitually acts in the business of the firm, it is considered as a notice to the firm and the firm is also responsible. Unless or except in case of fraud on the firm by or with the consent of that particular partner. If it is a fraud has been committed on the firm with the consent of the partner to whom the notice has been given, then it is not considered as a notice to the firm. Other than that exceptional cases, in every other cases, any notice to the partner who habitually act in the business of the firm with respect to any matters which are relating to the affairs of the firm act as what? Act as a notice to the firm, except in case of fraud or with the consent of that particular partner. 25, 26, 27 and 28. These section numbers are combination section numbers. Again, they deal with liability of a partners. So whenever the question comes in the examination with respect to liability of a partner, you can write section number 25, 26 as well as section number 27, most important section numbers. Section number 25 provides the liability of a partner for the act of the firm. Simple. In case of partnership firm, the liability of the partners is joint and several. So every partner is liable jointly with all other partners and also severally for all the acts of the firm done while he is a partner. I repeat, every partner is liable jointly with all other partners and also severally for all the acts of the firm done while he is a partner. 26. Liability of the firm for wrongful acts of a partner. If a partner does any wrongful acts while carrying the business of the firm, for such wrongful act, who is responsible? The firm is responsible. It is also called as vicarious liability in the law term. What is vicarious liability? Where for the wrong of one person, other person is held responsible. So the firm is liable to the same extent as the partner for any loss or injury caused to the third party by wrongful acts of the firm, if they are done by the partner while acting in the ordinary course of business and within his authority. I repeat, a partner's firm is liable to the same extent as the partner for any loss or injury caused to a third party by the wrongful acts of a partner if they are done by the partner while acting in the ordinary course of business and within his authority. Next one, 27 is most important. I expect ICA to ask question section number based on section number 27. Liability of the firm for misapplication by partner. There are two provisions here. Simple. What is misapplication? Misappropriation or conversion of property. If a partner has received any property or a money in the ordinary course of business and if he misapplies it, or if the firm has received the money in the course of its business or property from a third party and that property or money is misapplied by any partner while it is in the custody of the firm, then who is responsible? Firm is responsible. So if a partner has received any property or a money from a third party and if he misapplies it, or if the firm has received any money or a property from a third party and the party misapplies it and the property or money is misapplied by any partner while in the custody of the firm, then who is responsible for that? The firm is responsible. Next, partner by holding out or also partner by estoppel. We already discussed. Anyone who by his words expressed or any by words oral or written or by conduct represent himself or knowingly permits himself to be represented as a partner in the firm will be liable as a partner in that firm to anyone who on the faith of such representation has advanced a credit to the firm. But however, the principle of partner by holding out is not applicable to the deceased partner, insolvent partner, dormant partners. So they cannot be held responsible as partner by estoppel or partner by holding out. Section number 29, rights of the transfer of partners' interest. One more provision based on which they can be theory questions. See, the right of a partner in the partnership firm, it is like a goods which is transferable from one person to another person and that can be transferred either by way of sale, mortgage or assignment. But such transfer or assignment of a right in the partnership firm by a partner to an outsider does not make the transferee a partner of the firm, nor it ceases the transferor from being the partner of the firm. I repeat, the right or interest of a partner in the firm is a movable property which can be transferred by way of sale, mortgage or assignment. But such assignment or a transfer of interest does not make the transferee a partner of the firm, nor it ceases the transferor from being the partner of the firm or continuing to be the partner of the firm. So only what is transferred here? Right is transferred. So the right of transferee means the one who receives this right. That can be classified into two categories. During the continuation of the firm, he is not entitled to what? Interfere with the conduct of the business. Who is not entitled to interfere with the conduct of the business? A partner is not entitled to interfere with the conduct of business. Second one, he cannot require the accounts. The transferee is not entitled to interfere with the conduct of business. He cannot require the accounts. He cannot inspect the books. The only thing he can do is he can accept the share of profit which is payable to the transferring partners and he can't even challenge it. But on dissolution of the firm, he is entitled to receive the share of assets of the firm which belongs to the transferring partner. And to know the share of assets of the firm, he can inspect the books of the firm. So the inspection of books of the firm, this right is available only on dissolution of the firm. During continuation, he cannot interfere, he cannot require the account, he cannot inspect the books. On dissolution, he can inspect the books. Section number 29. Then we have section number 30. Minor admitted to the benefits of the partnership firm. Can minor be a partner? No. Can he be a beneficiary? Yes. A minor can be admitted to the benefits of the partnership firm with the consent of whom? All the partners. And when he is a minor beneficiary, what are the rights available to him? He has a right to what? Agreed share of profit of the firm. He can expect access to, inspect and copy any accounts of the firm, not any books of the firm, only the accounts of the firm. This right is different from section number 12. That is any books of the firm. This is what? Accounts of the firm. Next one, he can sue the partners for accounts or payment of his share only when he is agreeing to sever his connection with the firm. Means he should not continue as a partner once he initiate the case against the firm to recover his share or inspect the books of the firm. Next one, election by a minor important on attaining the majority. Once he becomes a major, he has to choose to become partner or not to become partner within 6 months by giving a notice. If he fails to make the election within 6 months by giving a notice, then after the expiry of 6 months, he is deemed to be a partner. Deemed to be what? Partner. Rights of the minor beneficiary. If he elects to become partner, he is entitled to share which he was entitled to as a minor. Means his profit sharing ratio, all the rights remain the same. If he does not become a partner, his rights remains same as if he was a minor beneficiary. That's it. He will not be having any other right. It means he will get his share and he will exit from the partnership. Liability is important. Based on this, they ask generally they'll ask theory questions. Liability of the minor beneficiary before he becomes a elect to become partner or after he becomes a major. Before he attains the majority, he can only be held responsible to the extent of share in the profit. He is not personally liable and he can't be insolvent. After he becomes a major, then he has two options, right? When he elects to become partner or not to become partner. If he elects to become partner, he is personally liable to the third parties for all acts of the firm since he is admitted to what? Benefits of the firm. Unlike a new partner, a minor beneficiary is liable from the date of his admission as a minor beneficiary if he elect to become partner of the partnership. And his share in the property and the profit remains what? Same to which he was entitled when he was a minor. When he elect not to become partner, the rights and liabilities continues to be that of a minor up to the date of giving what notice? Public notice. He shall be entitled to sue the partners for his share in the profit because he is not continuing the partnership. So these are the provisions with respect to minor. Provision with respect to what? Minor. So we discussed till section number 30. Section number what? 30. Let's repeat. Section number 1, short title, extent, commencement. Section number 2, definition. 3, application of partnership, contract act to partnership. 4, definition of partnership. Partner, the firm name. Section number 5, partnership is created by agreement, not by status. Section number 6, determination of existence of partnership. Section number 7, partnership at will. Section number 8, particular partnership. Section number 9, the general duties of the partner. Section number 10, the partner shall indemnify the firm for the loss caused to the firm by his fraud. Section number 11, determination of rights and duties. Section number 12, conduct of business. Section number 13, mutual rights and duties of the partner. Section number 14, property. Section number 15, application. Section number 16, personal profit earned by the partner. Section number 17, the rights and liabilities after change in the firm. Section number 18, agent. Section number 19, implied authority of a partner. 20, extension of implied authority of a partner. Section number 21, emergency. 22, it should be in the name of the firm. 23, admission by a partner. 24, notice to a partner. 25, liability of a partner. 26, liability of the firm for the wrongful acts of the partner. 27, misapplication of property by a partner. 28, 28, partner by estoppel or holding out. 29, the rights of a transfer of partner's interest. And the 30, minor beneficiary. What beneficiary? A minor beneficiary. Next, we have incoming and outgoing partners. Section number 31 to 38. Section number 31 provides the provision with respect to introduction of a partner. A partner can be introduced into the partnership firm only with the consent of all the partners. Section number 31 provides that subject to the contract between the partners, no person shall be introduced as a partner into the firm without the consent of all the partners. Means the only way in which a person can become partner of the partnership firm is with the consent of all the partners and by an agreement. And subject to the provision of section number 30. Section number 30 deals with minor beneficiary, and in that case, if a minor elects to become a partner of the partnership firm, he is liable from the date of his admission as a minor beneficiary, not from the date of his election. But whereas in case of section number 31, when a new partner is introduced to the firm with the consent of all the partners, the new partner is not liable for the existing liability. He is liable only from the date of his admission as a partner. So, any person who is introduced as a partner into the firm does not thereby become liable for any act of the firm done before he becomes a partner. His liability starts from the date of his admission as a partner. However, a new partner can become liable for the existing liabilities of the firm by entering into a contract with the existing partner and the creditors of the firm. That is called as novation. What is novation? A substitution of a new contract for an old contract. It is called as what? Novation. So, if there is a novation, partner is responsible even for the existing liabilities. Section number 32 deals with retirement of a partners. How partners can retire and what is the liability after he retires. A partner may retire with the consent of all the partners or in accordance with the agreement, or in case of partnership at will by giving a notice. So, the three modes in which a partner can retire from the partnership. First one, with the consent of all the partners. Second one, in accordance with express agreement by partners. And the third one, where if it is a partnership at will by giving a notice to all other partners. The retiring partners, will he be responsible for the existing liabilities? The answer is yes. However, he can be exonerated or he can be discharged from his existing liability by a contract between himself and the existing partners and the creditors. That agreement can also be expressed as well as implied. I repeat, the retiring partner may be discharged from any liability to any third party for acts of the firm done before his retirement by an agreement made between the continuing partner and the creditor, and such agreement may be expressed or it can be implied. But notwithstanding retirement of a partner, he continues to be liable unless what is given? A public notice is given, and this notice may be given by the existing the outgoing partner or by the firm. So there are 4 points here. First one, how we can retire. Second one, what happens to the existing liability. Third one is notice is required and who can give the notice. Section number 32. 33, most important provision based on which they ask generally the last theory question. See section number 33, and there are 3 plus 3 conditions for the purpose of a valid expulsion of a partner. So, what is expulsion? Removal of a partner. A partner may be expelled from the firm if it satisfies the following conditions. What are the 3 conditions? The power of expulsion must have existed in the contract between the partners. Second condition, the power has been exercised by whom? Majority of the partners. And the third one, it has been exercised in what faith? Good faith. And an expulsion is deemed to be in good faith if it satisfies how many conditions? 3 conditions. So 3 plus 3. First one, power of expulsion must be there in agreement. Second one, it should be done by majority of partners. Third one, should be exercised in what faith? Good faith. The test of good faith is that the expulsion must be in the interest of whom? Partnership firm. Should be for the benefit of partnership firm. Second one, the partner to be expelled is served with what? Notice. Notice must be given. And the last condition is that an opportunity of being heard should be given. So only when these 3 conditions are satisfied, if it is in good faith. So because it is in good faith, the expulsion is valid. So 3 plus 3 conditions. Next one, insolvency of a partner. If a partner becomes insolvent, what happens? where a partner is adjudged as an insolvent. From the date of adjudication as an insolvent, he ceases to be a partner of the partnership firm. And from the date of his adjudication as an insolvent, for the act of such person, firm is not responsible. In the same way, the firm is not liable for the act of the partner. Sorry. Uh, from the date of adjudication as an insolvent, the firm is not liable for the act of a partner. In the same way, the assets of the insolvent partner is not liable for the act of the partnership firm from the date of adjudication as an insolvent person. Clear? Yes. And you guys know, in case of death or insolvency of a partner or retirement of a partner, the firm is dissolved unless there is a contrary agreement. So, if there is an agreement which provides that the firm shall continue, notwithstanding insolvency of a partner, the firm shall continue. But for the act of the firm, who is not responsible? The insolvent partner is not responsible, and insolvency does not require any public notice. 35, liability of estate of deceased partner. So, where the firm is not dissolved by a contract between the partners, the estate of deceased partner is not liable for any act of the firm done after his death, and even death does not require the public notice. So, the assets of the deceased partner cannot be held responsible for any act of the firm done after the death of the partner. 36, rights of an outgoing partner to carry on the competing business. Important, they can ask practical questions. See, a partner, an outgoing partner, subject to the contract, means if the agreement provides something else, you cannot carry the same competing business. But if agreement is silent, an outgoing partner can carry on what? Competing business. Plus, you can also do the advertisement of his business. But however, he should not use the firm name. He should not represent himself as carrying on the business of the firm, or he should not solicit the customer of the firm who are dealing with the firm before he ceases to be a partner. So, subject to these three conditions, the partner can carry on the competing business and he can also do advertisement. But if the agreement restricts him from carrying on the competing business, then he can't carry the competing business. Section number 36. 37, rights of the outgoing partner in certain cases to share the subsequent profit. The retiring partner can also get share in the subsequent profit if the settlement of account is not done, if the payment has not been done to the outgoing partners. Simple provision, any partner of a firm, if he has died or ceases to be a partner, the surviving partner, if they carry on the business of the firm with the property of the firm and without final settlement, important here, the person ceases to be a partner, remaining partners continue without final settlement of accounts. In that scenario, in the absence of contract to the contrary, the outgoing partner at the option of himself has two rights. Either he can get a share in the profit made in the partnership firm, which is attributable to his share of property, or he can get an interest of 6% per annum. And this option is not available to him, whereby a contract between the partners and the outgoing partners, the outgoing partner's share is acquired by the remaining partner and the payment has been done. If payment is not done, then you can still exercise the right of section number 37. Important provisions. I expect the ICA to ask question based on this. Important, most important. The upcoming examination. Section number 37. The rights of an outgoing partners. Can he share the subsequent profit? Yes, only when the remaining partners continues to carry on the business without the final settlement of accounts. Next one, especially this provision is most important. 38, revocation of continuing guarantee. As you guys know, what is continuing guarantee? A guarantee which is given for series of transaction. It is called as what guarantee? A continuing guarantee. A continuing guarantee is revoked for the death of whom? Surety. In the same way, in case of partnership firm, any continuing guarantee given to the firm or to a third party in respect of transaction of the firm, in the absence of contract to the contrary, is revoked or cancelled by change in the constitution of the firm, having effect on what transaction? Obviously, the future transactions. Section number 38. Next, we have registration and dissolution of partnership firm. Important, based on which they generally ask theory questions. Okay. And based on section number 69, they may ask practical questions. Section number 58 deals with registration of partnership firm. How the registration can be done? Is it compulsory? No. Registration of partnership firm is not mandatory, but it is optional. How it is done? By sending a statement in the prescribed form to the registrar of the firm of having jurisdiction over the particular area. In that application form, you're supposed to mention the name of the firm, place of business, details of partners, as well as the signature of the partners. Registration, the registrar, okay, don't dance. The registrar satisfied that section number 58 is complied with. He can record the statement with respect to the registration and file the statement. Section number 59A1, late registration and payment of penalty. If the firm is not registered within 1 year of the commencement of business, the firm may be registered on payment to the registrar a penalty of how much? 100 rupees per year for delay or part thereof. Section number 69, most important one, most important, either theory question or practical question. Consequences of non-registration of partnership firm. As I said in the beginning itself, this section number came into force after 1 year of commencement of the Indian Partnership Act, which deals with consequences of non-registration. Registration ಮಾಡಿಲ್ಲ ಅಂದ್ರೆ ಏನಾಗುತ್ತೆ section number 69 provides the consequences of non-registrations, because as per English law registration is not mandatory, but as per Indian law as per English law it is mandatory, there is a penalty. But as per Indian law, is it mandatory? No, it is not mandatory. But however, there are consequences. What are the first consequences? Observe the word carefully. Those both are with respect to filing a suit, civil cases, not criminal cases. See, in case of criminal cases, we use the word called as complaint, not the suit. So no suit can be filed. In general words, a partner cannot sue the other partner. He cannot sue the firm if his firm is not registered and his name is not written in the register of firm. Simple as that. But law words, no suit to enforce the right arising from the contract or of this act, that is Partnership Act, shall be filed in any court by or on behalf of the person suing as a partner of the firm or against the firm. Means by partner against the other partner or against the firm, unless the firm is what? Registered. Unless the firm is registered and the person suing is or has been shown in the register of the firm as a partner, means his name should be there in the register of the firm or should have been there in the register of partnership. What if, let's say, there are 3 partners, registered firm, one partner retired, his name is not there in the register of firm, can he still file a case? Yes, because his name was there in the register of firm, is or has been shown as a partner in the firms. Clear? So a partner cannot file a suit against the other partner or against the firm to enforce the right available out of the partnership deed or a partnership act unless that firm is registered and the name of the person who is filing a suit was mentioned in the register of the firm or is mentioned in the register of the firm, was or is. Next one, this is with respect to suit against the third parties. No suit to enforce a right arising from a contract. If there is any contract between the firm and the third party, if the firm want to file a case against the third party, it can't file a suit. When if the firm is not registered and the person suing or has been not shown in the register of the firm, means unless the firm is registered and the person who is filing a suit, his name is mentioned in the register of firm, we cannot file a case against the outsiders. These are the consequences of non-registration of partnership firm. But there are few exceptions to section number 69. The non-registration of the partnership firm does not affect the following rights. Important one. What are they? A right to sue third party. A right of any third party to sue the firm or any party. Means third parties can file a case against the firm, but the firm cannot file a case against the outsider. Next one, right to sue for dissolution of the firm. The partners can go to the court even though the firm is not registered for the purpose of dissolution as well as settlement of accounts and realization of property. Next one, the power of official assignee or the court to realize the property of insolvent partner not affected. Right to sue or to ask for a set-off of an amount not exceeding how much? 100 in value. So up to 100 rupees you can file a suit or you can claim set-off. Next one, a right to sue by legal representative or heir of a deceased partner of the firm for the accounts of the firm or to realize the property of the firm. This purpose they can file a suit even if the firm is not registered. I repeat, section number 69 is most important. They'll ask practical questions. To be in a position to answer any of the practical question they ask in the examination, do solve the question bank which I have shared it to you guys, in which I have divided the answers into 4 parts: provisions, facts, correlation, conclusion. Do follow the same format to score more than 60 in the law paper. And there are precedents that the students have scored already more than 60 in my in the law paper. Okay, yes, even when the evaluation was tough. Next one, the last topic is dissolution of the firm. Dissolution, section number 39 to 47. Section number 39 provides what? Dissolution of the firm, and also provides difference between the dissolution of partnership and the firm. For theory question, please refer to the material which I have shared you guys, where it provides difference between dissolution of partnership and dissolution of firm. In case of dissolution of partnership firm, the relationship between all the partners comes to an end. In case of partnership, only between the few partners comes to an end. In case of dissolution of partnership, winding up is not compulsory. In case of dissolution of the firm, the winding up takes place. In case of dissolution of partnership, the firm may continue, but in case of dissolution of partnership firm, the firm ceases to be in existence. So these are the few difference. And in case of dissolution of partnership, there is a revaluation of accounts, revaluation of property, but in case of dissolution of partnership firm, there is a realization of properties. Modes of dissolution of the firm, there can be a theory question based on this. There are various modes in which the firm is dissolved. Out of this, the first one is dissolution without the order of the court or voluntary dissolution. Second one, dissolution by court. First one, dissolution by agreement. Without the order of the court, the first one is dissolution by agreement. The partnership firm is formed with the consent of all the partners, so it can be dissolved with the consent of all the partners. That is by agreement. Section number 41, compulsory dissolution. There are few cases the firm is dissolved automatically or by default. What are they? In case if all the partners are adjudged as an insolvent except one, the firm is dissolved. Or happening of any event that makes the firm business unlawful, if it is carrying a single business, then the firm is dissolved compulsorily. Next one, on the happening of certain contingencies, in these following cases, the firm may be dissolved, may not be dissolved. If there is an agreement to the contrary, the firm is not dissolved. Otherwise, it will be dissolved. What are they? If it is formed for a fixed term, and expiry of the term, if the firm is formed for a particular period, let's say 5 years, expiry of 5 years, the firm is dissolved unless the partners wish to continue the firm. Second one, if it is constituted to carry out one or more adventures or undertakings and the completion thereof, once it is completed, the firm is dissolved. Next one, by the death of all the partners, the firm is dissolved, or by adjudication of all the partners as an insolvent. So in all these cases, the firm is dissolved. Next, section number 43, by dissolution by giving a notice if it is a partnership at will. We know that in case of partnership at will, the partner may dissolve the firm by giving what? Notice in writing to the other partner. Next category is dissolution by order of the court. So where the firm can be dissolved by the order of court. The first one is what? Insanity or unsound mind. If a partner becomes insane or unsound mind. Second one, permanent incapacity, not temporary incapacity. Misconduct, any conduct of the partner which will affect the carrying of business of the firm in that scenario. Next one, persistent breach of agreement by a partner. If a partner transfer his interest without the consent of other partner. Continuous losses. Based on this, they asked question in the last examinations. If there is a continuous or perpetual losses in the business, the firm can be dissolved. And the last one, just and equitable ground. This is a discretionary provision which provides the right to the court to dissolve the firm. Just and equitable purpose. So these are the modes of dissolution of partnership firm. First one, without the intervention of the court. Second one, with the intervention of. Section number 45, liability for the act of the partner done after dissolution. See, 45, 46, 47, 48 and 49. These last few section numbers are most important. Keep this in mind. Section number 45. Liability for the acts of the partner done after dissolution. Simple. If you remember the headings of section number 45, you can write the answers in the examinations. What does it says? Liability for the acts of the partner done after dissolution. Not with this section number 45 provides that the partners continues to be liable for the act of the partner to the third parties unless until what is given? Public notice is given, even though there is a dissolution of partnership. I repeat, notwithstanding dissolution of the firm, the partners continues to be liable as to such third parties for any act done by any of them, which would have been an act of the firm if done before what? Dissolution, until what is given? Public notice is given of the dissolution. It is not applicable in case of what partner? Obviously, deceased partner and insolvent partner and dormant partners, because the principle of estoppel is not applicable for them. So, in brief, section number 45 is clear. The partners continues to be liable for the act of a partner to the third parties unless until what is given? Public notice is given. 46. Right of the partners to have the business owned up after dissolution, means to realize the properties and apply them towards the liabilities and to distribute the surplus among themselves in their profit sharing ratio. So on dissolution of the firm, every partner or the representatives, they are entitled to what? Against all other partners or representatives, to have the property of the firm applied for the payment to be done as well as liabilities to be paid, and to have the surplus distributed among themselves in their profit sharing ratio. Section number 46. 47. Continuing authority of the partner for the purpose of winding up. This is also important. Name itself provides continuing authority, means the partners continues to have the authority notwithstanding the dissolution of the firm. For what purpose? Only for the purpose of winding up affairs of the firm and to complete the transaction which has begun but unfinished at the time of dissolution of the partnership. So only for such activities the partners continues to have the authority to bind the firm. I repeat, after dissolution of the firm, the authority of each partner to bind the firm and the other mutual rights and obligation of the partners continues notwithstanding dissolution as far as may be necessary for the purpose of winding up of affairs of the firm and to complete the transaction which has begun but unfinished at the time of what? Dissolution of the firm. It is not applicable to which partner? Insolvent partner. 48 is important. In the MTPs, they ask this mode of settlement of partnership account. How the settlement of accounts happens. The following rules shall be subject to the agreement between the partners. So, if the partners have a contrary intention in the partnership deed, that is what is supposed to be followed. If agreement is silent, settlement of accounts happens as per the following provisions. First one is what? The losses including the deficiencies of the capital should be paid. How the losses should be paid? First out of profit, second out of capital of the partners. Lastly, if it necessary, the partner should contribute individually in proportion to their what? Share of profit. They have to bring in the purpose of paying the losses of the partnership. Second one, if there is any asset, the assets of the partnership firm, including any sum contributed by the partners to meet the deficiencies, should be applied in the following manner. What is the first one? In paying the debts of the third party. Second one, in paying each partners for the loans. Third one, in paying each partners rateably towards the amount of capital. And the last one, if any residue is left, surplus is left, that shall be divided among the partners in what ratio? Profit sharing ratios. Section number 49, section number 49, section number 49, last section number payment of the firm debt and separate debt. Simple. First namdu amele bereyodu. Right. So where there are joint debts due from the firm and also separate debt due from any partners. So out of the property of the firm, first what you will pay? The firm's liability. First instance, the payment of the debts of the firm, and if there is any surplus to be payable to a partner, out of that surplus payable to partner, you will pay whose debt? The partner's debt. I repeat, where there are joint debts due from a partnership firm and also from a partner to a same person. Out of the assets of the firm, first what you will pay? The firm debt. If there is any surplus which is payable to a partner, out of that surplus you will pay whose debt? The partner's debt. In the same way, the separate property of any partner shall be applied in the payment of what is separate debt than the firm debt. This is how what is done. The payment of the firm debt and the separate debts are paid. And this is your entire a rapid revision of entire Partnership Act 1932. For concepts, for questions and the answers, please refer to the question bank which I already shared it to you guys. So this will help you guys. This video will help you guys for the quick revision of your Indian Partnership Act 1932. So let's recall one last time. Let's recall all the topics which we have discussed till now. Section number 1, short title, extent, commencement. Section number 2, definition. 3, application of Contract Act to Partnership Act. Section number 4, definition of partnership, partner, firm, firm name. Section number 5, creation of partnership by agreement, not by state. Section number 6, mode of determination of partnership. Section number 7, partnership at will. Section number 8, particular partnership. Section number 9, the general duties of the partner. Section number 10, the partner to indemnify the firm for the loss caused by his fraud. 11, determination of rights and duties. 12, conduct of business. 13, the mutual rights and duties of the partners. 14, property of the firm. 15, application of property. 16, personal profit earned by a partners. 17, the rights and duties of the partners after change. 18, partner to be agent of the firm. 19, implied authority of a partner. 20, extension of authority of a partner. 21, emergency. 22, name of the firm. 23, admission by a partner. 24, notice to a partner. 25, liability of a partner. 26, liability of the firm for the wrongful acts of the partner. 27, misappropriation of property by the partner or the firm. 28, partner by estoppel. 29, rights of a transfer of interest. 30, minor beneficiary. 31, admission. 32, retirement. 33, expulsion. 34, insolvency. 35, death. 36, rights of an outgoing partner to carry on the competing business. 37, subsequent profit. 38, dissolution of partnership firm. Revocation of continuing guarantee. 39, dissolution. 40, dissolution by agreement. 41, compulsory dissolution. 42, contingency. 43, notice, dissolution by notice. 44, by the order of court. 45, continuing liability of the partners even after dissolutions. 46, the winding up, to wind up the affairs of the partnership firm. 47, the rights of the partners, the continuing authority of the partners. 48, settlement of accounts, and 49 is the payment of the firm debt and the separate debts. I hope you guys find this rapid revision video helpful. If you guys want me to make any rapid revision video on any other chapters, please do comment and let me know. I would be happy to assist you guys. So together, let's make sure we clear the examination in the September with good marks in law. Do comment the section numbers and the favorite moments of yours in the class in the Indian Partnership Act while discussing the Indian Partnership Act 1932. I'll see you guys in the next video. Until then, keep learning law. Dhanyawad.